Last transaction I wanted to show you guys that we are doing right now. Bank is owed $9.6 million. The bank is out of Minnesota. This is a property in Gilbert. It is raw land, but we do find it to be the center of the universe. It's right next to the mall we completed, so we really understand its value. The bank is owed $9.6 million. We are purchasing the note for $5 million. We're supposed to close on that at the start of September. And immediately, without soliciting, we have 3 or 4 home builders offering us LOIs, none of which are less than $8 million. And so we are going to quickly flip that, probably in the 8.25 range. The downside and why we're getting the discount is these offers are subject to zoning. Right now the property is zoned for 2 lots per acre, and these home builders want 3.3 lots per acre. So this transaction will take 12 to 16 months depending on how quickly we can move it through the city process. But nevertheless, in 16 months, a nice healthy return for us. You can see it's an infill area, really good farm ground right now. Another advantage is it's farmed for corn, and so the taxes on it is zoned or taxed agricultural. So this property tax would typically be $125,000 a year, and right now the taxes on it are $3,200 or so. That gives you a little better idea of where the property is in regards to growth.
Is that a residential community right next to it?
Yeah, this is all residential.
And just to the south of it, or?
To the south, this is a pocket acre and a half lots, and then here's all the commercial just outside of the picture. This is the regional mall, restaurants, etc.
Where is Gilbert?
Gilbert is about 225,000 people, and it is just east of Tempe and Chandler. You guys know where that is? Yeah. Really, really higher end community. Not a Scottsdale whatsoever, but actually has the highest income per capita, I think I said that right, per demographic in the Phoenix Valley. So per family, the income is about $108,000. Typically higher educated people, two-person income households. There was a time, sorry I'm yapping a little too much, but this property that we feel is worth $8 million, there was a time that property was worth $24 million. And I'm not exaggerating, there were offers on it. Essentially, we're not exactly sure where the market's going. And we base our decisions on properties that make sense right now with quick turnaround. We're not leveraging anything. I was in a meeting earlier this morning asking what our returns are on our leverage. Right now we are all cash. And there are some cash flow properties that are so attractive to leverage, and even in an industry or a market where it's tough to borrow, would be really easy to borrow against. But right now our MO is to buy with cash with quick windows of liquidation. Residential homes within 90 days, commercial properties within 12 to 24 months. We feel that's probably the best way to stay ahead of the market. At some point when this spigot dries from the banks, then we'll start purchasing properties with the idea of possibly stronger yields, but longer term yields. That's ARCUS's MO right now.
You mentioned the market having slid since May. And that you're targeting more cash flow properties or shorter term flips. I mean, are you somewhat cautious in going into properties right now, or are you still seeing great opportunities? I mean, if you've got cash on the sideline, are you anxious to use it, or are you more? Right
now, we're not anxious to use it. Yeah. There are still some properties, including this one, that we're really happy with and are going to take down. But we're going to see how things look. I anticipate within the next 60 days of seeing more opportunities than we have seen in the last 6 months. And so just want to be really slow, take down the absolute premium properties and pass on the B's and C's.
Are there,
Well, are you talking about property, like actual land, or are you talking about commercial buildings?
Most of the time commercial buildings, yeah. In this market, it is quite easy to sell a true Class A building with occupancy. And so if there's a true Class A with 90% occupancy, then we want to buy that note. We'll have to pay a little premium, but we're still going to pay, I would say, 65 cents or less on today's dollar to the bank.
Now, I came in a little late, so I'm on business part. Are you looking just in the Arizona, or are you looking at any commercial property in Southern California?
Yeah, we do look nationally. I was telling some people this morning we spent a lot of money on a building due diligence in Washington, D.C. Typically we stay West Coast, but this one was really attractive to me because it fit the same model as the Fresno building, if you saw that.
I did. Actually, I saw you had the one that you did sell. It was back east or whatever. Too.
Okay.
Yeah, that was the Air West or something originally.
Yeah.
But do you concentrate mostly, or you don't really care? I mean, they call you, it's a great deal, that's
As long as the numbers make great sense and it cash flows, we will look in any market. With that caveat, we wouldn't have ever bought something in Fresno, except that the tenant was so strong.
Maybe speak to the Denver building.
Yeah, Denver was a building, or is a building, 339,000 feet. It's a high-rise downtown Denver. It is the old Quest building, still has their logo on it. They moved out last year to a bigger and taller building down the street, about a block and a half. The property assessed for $36 million. It was appraised when we purchased the note for $24 million, and we bought it for $12,320,000. We are slowly leasing that up. We're able to undercut the market quite a bit. All the other buildings around us have such higher basis and debt basis that we're able to go in and offer lower leases. However, what happened was we quickly realized, number one, we started our leases too low, and so we quickly pulled back and thought we don't want to bastardize this building. The Denver area, commercial area, has come back quite strong in the last 2 quarters, and so we want to just slowly stabilize this building so that we have strong long-term leases when we sell the property. We're in at $36 a foot, and price per pound, I don't think you can get any better than that. Please.
Those 4 banks that you mentioned, J.P. Morgan, Chase, Wells Fargo, where are they in getting rid of these toxic assets? I mean, are they halfway down?
I don't think they know. I don't think they know is probably the best answer. Had you talked to them last year, they would have said, we have a year left. And I think if you talk to them today, they're going to say, we have a year left. And typically, when they want to liquidate something quickly, they have to liquidate the more attractive properties over the dogs. And so typically, they'll bundle the dogs up, and then they'll onesie-twosie the really sharp, attractive ones.
Have you seen more competition in the room for the notes than you were before?
Yeah, we have seen a little more competition. I think we've seen in the last 6 months, although that's changed in the last month. Before that, less deal flow and more competition.
You kind of spoke to you're not always the top bidder. Out of 10 bids that you get, how many do you actually get, or kind of that you actually are bidding on that maybe you actually take down?
I would say after I've given him the straight face, I'll give you this amount of money. If he says, okay, fine, that somewhere in that range will work. When we do the due diligence, we've bid on probably 15% of them. And so far, we've probably gotten more than 50% when we bid on. But when he calls me up, or any of them call me up, and I just throw a number out, maybe 5%. Very, very low. But right now is the time to take advantage of other people's fears. It doesn't mean that this market is going to get any better very soon, but at these discounts, if you're truly buying at discounts on today's dollar, people always say, well, I bought this 25 cents on the dollar. Well, what they're really saying is 25 cents on 3 years ago's dollar. So they might have paid 100%. But if you're buying it at huge discounts on today's dollar with a short-term exit strategy, you're likely to have strong returns, which we so far have been providing.
You said there was about 15% you due diligence on, you close about 50%. How many deals are you actually looking at on a monthly, quarterly basis?
I would say monthly, 50 plus. Mm-hmm. Yeah.
May I ask you how large your staff is? I mean, how do you research all this?
Someone else asked me that, and Charlie, I didn't answer accurately. I told him 6, and there's 8 of us. So
that's a lot of work on due diligence.
it's a lot of work, and the head of due diligence is Kent Kleiner. He's an absolute animal, and you'll see him there at 6 a.m. or 8 p.m., and he just sits behind his desk. We just gave him a window there, but before he didn't even have one. And typically he and his assistant will sift through everything, and then it'll come to my partner and I, and then we'll go from there.